Good morning, everyone. The September CPI inflation reading just came out, and it came out hotter than expected across every metric. Headline came in at 2.4% compared to 2.3% economists estimated. That's the year-over-year number. And then month-over-month for headline came in at 0.2% compared to 0.1%. And then for core CPI, which is CPI minus volatile food and energy, that came in at 3.3% compared to 3.2% economists estimated. Then for core month over month came in at 0.3% compared to 0.2%. This is the last CPI inflation reading before election day. And the fact that it came in hotter than expected across the board, combined with last Friday's hotter than expected and stronger than expected jobs report, shows that the economy is still very strong. And we might have still some inflationary impulse in this market. Maybe the Federal Reserve's cutting 50 basis points at the last meeting, maybe that wasn't necessary considering how strong this economy is. But we also have some conflicting data with the job market. Jobless claims came out this morning for the week at 258,000. Compared to 230,000 estimated, but I think most of that is due to Hurricane Helene, so we got to take that with a grain of salt. But the fact that last Friday's jobs report was really strong, combined with this showing that inflation's coming out hotter than expected, is unfortunately something that we have to watch. Yes, inflation ticked down from last month. Last month, the headline number was 2.5%. Now it's 2.4%. 2.4%, still the lowest in a year and a half. But this is something that we still have to watch. We don't want inflation to be higher than expected. So I think because of this, the stock market might sell off today. I think bond yields will rally because of that, because there's still an inflationary impulse in this economy. So on top of that, China released a little bit more stimulus. They released $71 billion. So that'll be good for the Chinese market. But unfortunately, we have to watch the U.S. market today, considering inflation came out hotter than expected across the board. And I wanted to touch a little bit on something with Bitcoin and crypto that I forgot to mention yesterday, is that BlackRock put out a report that Bitcoin and crypto is being adopted faster than the internet and mobile phones. So this is something that's important. This is what's known as an S-curve. And this technology adoption is another factor of why I think Bitcoin will appreciate in price and probably will eventually break out of this 6-month trading range and should eventually hit 100,000 by year end, in my opinion.